Subscribe to our YouTube channel and press the bell icon to get the latest updates.
The best example of a monopoly business nearly 2 decades back was the tiny photocopy shop at university campuses. There was usually just one such shop in each campus with no competition. In a world without smartphones, the photocopy outlet, or what most called the Xerox shop, was a savior. The services of the photocopy shop was critical to students and professors alike. Waiting in long queues, paying double the price, or tolerating poor quality of printing paper did not matter. I remember wondering why the universities allowed such a monopoly to flourish, until my prayers were answered and there were a couple of more such outlets in the vicinity. To begin with, the photocopy shop lost its monopoly, lowered charges, and offered better quality print. By the time I finished university, laptops and smartphones had literally put the photocopy shop out of business. That taught me an important lesson. Not every monopoly thrives forever. On the contrary, many go downhill or even fail. Hi, I'm Tanushree Banerjee, editor of Equitymaster's Blue Chip Recommendation Service, Stock Select. Welcome to Safe Stocks, where we discuss ideas to create and preserve wealth in the safest businesses. If you haven't subscribed to the Equitymaster YouTube channel yet, please do so and click on the bell icon to get notifications for my latest videos. So years back, I read an interesting example of a monopoly business in Peter Thiel's best-selling book 0 to 1. He compared Google with America's airline industry. Thiel highlighted the fact that US airline companies serve millions of passengers. It generated back then hundreds of billions of dollars in revenues every year. Yet it captured an insignificant amount of this value. When one compares the airlines with Google, it is evident what was amiss. Despite a third of the airline industry's revenues in 2012, Google's profits were 100 times higher. The reason was simple. Google was and is a near monopoly. The airline industry operates in a near perfect competition market. Google could plan for the long-term future and invest in innovation for decades. Airline companies are focused on protecting today's margins. They can't think beyond protecting their margins, nor do they have the flexibility to care about employees, invest in innovation, or build sustainable moats. It's clear why investing legends like Warren Buffett are attracted to monopoly businesses. Back in 2012, Buffett bought into VeriSign and then increased his stake over the years. How is VeriSign a monopoly? VeriSign is the registry for the .net and .com URL extensions, which together accounted for 55% of all top domains in the world. When some registrar registers a URL ending in one of these extensions, it has to pay a yearly fee to VeriSign. But this monopoly is subject to license regulations. So to think that all monopolies are risk-free is a huge mistake. Pharma companies that enjoy patent monopolies lose their edge after the patent lapse. Similarly, companies that are monopolies in certain geographies eventually see competition eating into their share. If you are wondering whether monopolies in India have destroyed wealth, look no further than the public sector units. Coal India, BSNL, BHEL, NTPC, and of course there are the unlisted ones like Air India, which have accumulated billions in losses over the decades. It's not that the private sector monopolies stay untainted. Bharti Airtel lost its wealth creating potential as soon as India's telecom sector saw stiff competition. Maruti Suzuki and L&T have from time to time struggled to retain their market share over the past couple of decades. So it's not the absence of competition or the market share that determines the true wealth creating potential of monopolies. Pidilite and Asian Paints have proven that a monopoly is not necessarily a moat. The company doesn't need to be born with it. It's just something that must be constantly nurtured. Asian Paints removed all the layers of channel partners and reached out directly to paint dealers. Similarly, Pidilite created a pull-based demand for its products by targeting carpenters, educating them about the benefits of its products. constant product innovation, adapting to the latest technology, strengthening supply chain, etc., can all help companies enjoy monopoly like fortunes. Traditional companies must pivot their business model to continue their monopoly like edge. You should not be surprised to find automakers investing in electric vehicle technologies or banks investing in fintech like applications. Similarly, new age fintech companies, e-commerce ventures and EV makers must ensure that being early entrant does not force them to compromise on their monopolistic edge. Some solid monopoly stocks have been big gainers in the market rally over the past 2 years. But the problem is that not all of them will retain their edge. Most do not have the virtues to make them permanent wealth creating franchises. So, you must evaluate your favorite monopoly stocks like any other business which has the chances of failing. And you must not pay a price that you may regret later. Hope you like this video. Stay tuned for more such videos on the safest and most appealing permanent wealth creating stocks. Thanks for watching.